benchmark that we look towards for all investing. We ask the question, where's that? We'll compare everything to that. That's your benchmark, and it's moving higher. Stocks felt a little bit pressured today. The fact is, this economy can function with interest rates, the U.S. 10-year Treasury, above 4%. We're already doing it. There's a small amount of slowdown with employment. We're seeing this in initial claims. 2 more days, we'll be getting that, so you want to keep an eye on that one. But I see continuing claims kind of slowing down a little bit. Let's jump into the computer and I'll show you what I'm looking at for the stock market review for today. If you're just finding my channel for the first time, thanks so much for stopping by. This channel is growing quite rapidly. I'm really happy about that. Thanks so much for all the likes, follows, and comments down below. If you're interested in more, what I do here, first, I'm an economist, and I break everything down and I show how the economy is operating and what that means to the stock market. At the same time, I look at individual stocks. I've got the top 50 value investment stocks up on my website. I launched it just over the weekend. We had a holiday weekend here. Make sure to stop by dhtayloranalysis.com. Links and everything are down below. Let's jump in to look at what happened with the stock market broadly speaking. Now, what I do is I break down each of the sectors and the S&P 500 itself, NASDAQ as well, one share. I don't weight this. The reason being is I want to know what one share, what that will do, not the broader stock market. And I look at yield. Yield, when I'm looking at that, what I'm looking for is the next 4 quarters, add those up, divide that over top of the current price. That's the expected yield that that company will generate in income. As a shareholder, this is what we as investors could be looking to earn. So the S&P 500 is all 500 stocks, but one share, not the weighting. The broad-based yield for the S&P 500, over 5%. There's still a lot of juice in the tank, but there's a lot of asterisks there, so don't just go jumping in buying one share across the board. You get some stocks that maybe not necessarily the best value investments. The reason being they may be undervalued right now, but their stocks won't really move too much higher, or they may even be moving lower. Breaking down, these are the Spider Select Sector ETFs, XLC, XLK, XLF, all the way down. You can see the 11 sectors for the stock market, and you can see the yield. NASDAQ and XLK stock, technology stocks, the most overvalued. Everything else, lots of juice in the tank there. What I do is I get this, I post this up on this stock market review video every day, kind of break that down. All right, U.S. 10-year Treasury yield, we're looking at 4.06 was roughly the close. I pulled this out just a little bit close to the end of day. Pushing back above the 4% line, and I think we'll probably go a little bit higher, but I don't think we're going to see a catastrophic event occurring with stocks. I think that what we saw in October was sort of an outlier. We saw the U.S. 10-year Treasury push above 5%. Stocks sold off sharply. The Federal Reserve kind of gave us a little bit of, yeah, we think we're about where we need to be. If we stay where we are with short-term rates, I believe we stay there for a long time. I also believe that likely the Federal Reserve might have to kick things up, maybe a quarter, maybe a half a point going into the rest of this year, because I don't think inflation is quite down where it needs to be. Prices for housing starting to move back upward, but income levels are not keeping pace. So that inflation is probably going to work back into the economy. If we continue to see unemployment moving lower, keep an eye on continuing claims, comes out Thursday mornings. If we continue to see that moving lower, then that tells me that the market or the economy is going to start moving back forward. The Fed ain't there yet. Stock market itself, broadly speaking, kind of kept pressured downward, but kind of went basically flat for the day. Down just a little bit, not too much. The bigger picture, taking a look at the VIX, volatility index is an important indicator to keep an eye on. This tells us, are people getting worried? And there was a move from 12.5 up above 14.25 for the VIX. Now, the VIX, let me show you the next chart. This is PCC, according to TradingView, this is the symbol for PCC, put call index. And what this shows us is what is the ratio puts to calls. Normally a little lower, maybe 0.8 is about normal based on going backwards over the past couple. This is the weekly chart, the ratio here. And as you can see, we're a little bit elevated, but there was a lot of room to the downside. As more and more puts are purchased, that pushes the VIX higher. It's a simple math thing. So when you look at the VIX, don't look at the VIX plain vanilla. You got to look at the put-call ratio. If we see an increase in a lot of purchases with puts, that's going to elevate the VIX regardless. So that's where you're really kind of looking at. This is basically telling me investors might be a little bit worried buying puts, protection, or position trades. They could be selling calls as well if they're sophisticated enough. Not sure on that one. Final thing I want to look at for the stock market review for today, U.S. dollar index. As interest rates move higher, the differential favors the U.S. dollar. What the FX traders are going to do is they're going to borrow in some country, such as Japan, where interest rates are basically zero, and then deposit it in the U.S., where the U.S. 10-year Treasury is at 4%. They earn that differential. Just one little thing before you can do that trade. You have to buy the US dollar, sell the Japanese yen. Dollar index moving higher. The asterisk to that is, as the dollar index moves higher, all the international companies, will have to repatriate their funds into the United States because of the US dollar being stronger. Profits are going to be relatively lower. So not exactly a good thing. We'll see what happens with that, and I'm going to keep that. I bring in the US dollar index plus the VIX and put call ratio whenever I need to within the stock market review today video. I try to do it as often as I need to. The move higher in the dollar, that's telling. Money is moving, and they're probably going to be buying up some bonds, safe haven. So it could keep a lid on what's happening with the bond market. But if we do see yields continue to trickle higher, that'll probably put a cap on the S&P 500. I don't think we're going to see a huge sell-off given the information we have today. Nonetheless, make sure to hit the like and follow button down below. Make sure to stop by my website, dhtayloranalysis.com. You can check out the top 50 value investment stocks, plus economic analysis, individual stock analysis, and much more. We'll see you in the next video.